gang, this is Dave with Systematic Investors Group, and it is August the 23rd, 2022. I just wanted to do a really quick update to a video that I did on, I believe it was August the 2nd of 2022, that was just talking about, should we get back in the market with systematic trading systems. Now, full caveat or full disclosure, I did get back in the market around that time with my automated systems because they started generating signals again. So I just wanted to kind of do a even though I do automated trading strategies, I do look a lot at technical analysis. That's kind of my background. That's what has kind of brought me to systematic trading. And what I do with my systematic trading is I base my trading strategies off of a lot of technical analysis concepts. So a lot of the technical analysis that I've learned over the years, I've tried to systematize, quantify, and develop rules-based strategies around. But I still use it as a broad kind of base to look at the market. So let me just, with that being said, let me just take a quick look at the market and provide a bit of an update. Now, if we look at the SPY, one of the things that got us back into the market to begin with, one of the major regime filters that we use is some key moving averages. When the market is trading above some key moving averages, it's a good sign that maybe the market is ready to turn. So in this case, I was basing the decision off one of my regime filters that I use, which is the 95 EMA on the SPY chart. So if you look at around this time frame here, you can see that the market broke above the 95 EMA on the daily chart. So let me just be clear. On the left hand side, this is a daily chart of the SPY. This is a 60-minute chart in the middle, and we won't focus too much on this one, but on the very right hand side, just so you know what it is, this is a seasonal average chart. I do like to look at seasonal trends and seasonal tendencies based on the last 20 years and accumulating over the last year. So for example, this will be the red line will be the 20-year trend average over the last 20 years. But I don't want to focus on that. So let's just shift focus over and zooming in on this chart of the daily. So what I was looking at was this base pattern and then breaking out of that base pattern and then clearing decisively the 95 EMA of the SPY. And you could see there was overhead resistance here coming into this trend line. And then now we're just coming back in and we're retesting that 95 EMA. Let's take a look at this on actually the S&P futures using this symbol \ES, because it actually does give a much cleaner charting pattern because it uses the 24-hour the overnight session in the futures as well. So same kind of pattern here. We broke out of this base pattern. Here was the kind of structural change I was looking at if it broke above this peak, so that we were now going into, instead of I always mix this up, so just forgive me here. We were starting out with lower highs and lower lows, and now we were shifting in this structure with higher highs and higher lows, right? So we're basically looking to stair step higher. Now we came into this major area of resistance, which you can see was denoted by this kind of fairly clean channel. It's a bit more like an accordion or a megaphone, but it's more like a channel. So this down channel here, you can see there's major resistance here at these peaks where this trend line comes into play, and we were expecting a pullback around this level after we had this nice little run up. So now what we're looking at is we're saying, okay, well, our determination to get in this market was a break above the 95 EMA on the SPY, which coincides pretty close with this level on the ES. And now what we're doing is we're coming back in and we're testing this level. So what we're looking at here is you can see the MACD is above its zero line, which is positive. We had this squeeze that broke out, and what that was telling us is that the market was ready to move, right? But now what we're looking at is if we drill down to the 60-minute chart, we're heading into another squeeze where the momentum is kind of shifting back up to the high side. But what I really want to put the attention, where I want to put the attention is that we had a clear level of support here, right? This area, it's more an area, not as a direct level, but we've denoted, certain areas on the chart, and this is a dynamic level. We had kind of a horizontal level here, but you can see here we hit a low, and then we hit a lower low. But as we did that, we have a positive, some positive momentum. So that is a positive momentum divergence. And now we're heading into a bit of a quiet period. And the question is this squeeze going to pop off to the high side and we're going to jump out of this area here and start moving higher? So what I'm looking at in order to give me confidence to keep moving forward on the long side is I'm looking at this area of support holding, even if it does break lower, but into these divergences, even if it does temporarily break lower and let's say spike lower, but I want it to come back up around this area, and then I want to see it take off and then break this trend line and ultimately break this this high. So that's what I'm going to be looking for. So, in other words, like I'm going to be looking for basically this area to hold off of this momentum divergence on the 60-minute chart. And then I'm going to be looking for the market to take off again and break this upper trend line. That would give me the most confidence to know that we are out of a sort of bear phase. Okay, if we can break out of this channel decisively, off of these, off of these kind of technical, these TA kind of phenomenon that we're looking at. Not that it's a phenomenon, but these, these data points, right? And these points of interest. If we can decisively hold support, break out of this trend line here, which is resistance to the high side, that would give me the confidence to continue on with my trading strategies. Now, I'm going to continue on with them anyways. They are rules based. They are going to stay in the market until the rules tell them to get out of the market. But as a quiet observer to my automated trading strategies, I like to look at analyzing the market, not only to try to keep me sharp, but to understand what is also going on in the market. So just to recap that thought, so basically what I'm looking at here is we've got this area of support where you have a confluence of this 95 moving average. You have some horizontal support here, and we're looking at a possible holding of that level if we drill down to the 60-minute chart off of this positive divergence level, and we're looking at holding that level and breaking higher and hopefully breaking this trend line so that we can decisively move higher into another bull phase of the market. So I hope that makes sense. Let's just take a quick look at some corresponding markets like the VIX. So you can see the VIX was, very low, and it did spike higher, but it spiked into some resistance. We'll see if that spike will basically get pushed back down, and the VIX will travel back down into some of these lower levels. Other major markets like the NASDAQ is into its kind of major support level there. It's printing the same kind of divergence patterns off of the positive divergence patterns off of the lower time frame charts. And you can see here it's getting quiet, but it's getting ready to set up a move as well. And then if you look at the Dow futures, kind of doing the same thing, right? You've got these divergences. It's fired off what looks like a short squeeze, but that momentum could turn to the high side, back to the positive side there. This actually is in progress. It hasn't actually hasn't really fired off. It's actually in progress right now. So this is kind of like an interbar. You can see that it went off, it went on. This is an interbar signal. You got to wait till the bar actually closes. So anyways, gang, I tried to keep this short. Sorry, I went a little bit longer than I wanted. I mean, we're either at a good level of support here. If we break this support level, I would be a little bit, cautious that this move may actually, this up move may actually be over and we could be heading back down. Hopefully that doesn't happen. I think we kind of had enough of a down move to signal that we could be moving higher, but the economy still has a lot of headwinds above it, and you never really know. So the only thing you can really do is look at the market at key levels, like I try to do here. This was a key area to look at. This is another key area to look at. I wasn't able to cover this area, but I was expecting a pullback from that. But now I'm kind of expecting support from that. If the market fails to do that at this key inflection point, which is what I was going to say, is you can only really, if you're a discretionary technical trader, for example, you can only really look at the market at key kind of a decision points, I like to call them, or inflection points, and make decisions based on those key levels. As a systematic trader, you just kind of let things go and you try to put the rules in the system that will handle the most situations as best as possible. Because they are pretty rigid. They're not that adaptable. So you're just looking at the statistical performance of those rules over the long term. But as a technical trader, if you're looking at this, the only thing you can really do is look at these decision points, these inflection points, and I try to correlate them with my systematic trading, even though I let them just run automatically and I don't interfere in them discretionarily anymore. Okay, because they typically make better and more consistent decisions than I do. So anyways, gang, we're approaching 15 minutes on this video. I actually wanted to keep it to 5 minutes, so I apologize for the overrun. I hope this helps. Look forward to seeing you at a future update. Bye for now.